Let's bring in Tom White, co-host of Fast Market and senior options contributor, to help set up the action today. All right, before we get into equities, we have to talk about gold. I mean, listen, that just keeps on racing higher. It was interesting, you know, when you saw last year, gold and equities were moving in lockstep. Gold is at the top of the leaderboard. Can you characterize what's been fueling the gains, or, you know, capture what's been fueling the gains most recently, Tom?
Hey, Diane, I think it's just widespread buying. We talked about gold into the end of 2024, and it was central bank buying due to all the geopolitical risks. So they were putting their store of value into gold, right? Buying gold across the board. It didn't matter which country was doing it. They were all doing it, including the U.S. And now it's starting to seep into the retail trade here. Gold's up over 53% so far this year. It's overbought on a technical level by a lot. The RSI on it's about 85. But this, you know, I think when you see the equity market rising, that risk-on mentality, pushing back into gold to kind of protect maybe those gains in the equity market. I think that's how the retail client's starting to think about it. You're starting to see a lot of analysts come out and say, hey, you need to have not 5% of your portfolio or 2% of your portfolio in gold. Now it's got to be 15%. Ray Dalio from Bridgewater, he came out and stated that recently. But then you had weakness in the U.S. dollar also. That was helping propel gold up a little bit. As the dollar was falling, you start reaching for gold here a little bit. But now the dollar's up over 1% this week, and it hasn't dented gold at all. Pulling back a little bit from those all-time highs that we saw earlier in the session. Still up 1.3% today. Diane, I think this is it's getting a little thick. You listen to those that commentary out of Ken Griffin from Citadel recently, and he said it's getting a little bit frothy here as far as gold goes. But you know what? I think we're in that environment now where if we do see any pullback in gold, you're going to have people buying it and scooping it up, and that might last a little while.
Well, some would say equities are a little bit frothy. We'll see, especially since we're about to kick off earning season. Let's talk a little bit about the AI arms race. We've got this new report from Bloomberg about xAI and Nvidia, and xAI reportedly seeking to beef up its latest funding raise to $20 billion. Nvidia being a big part of that. What's your take here on this, Tom?
The circle of investments continues here, Diane, in AI. Nvidia. Putting in about $2 billion of their own. This is going to be a lot of debt-ridden capital raise here by xAI. But this is what I think these companies have to do to kind of compete. I don't think there's going to be a real one horse winning this race in AI as the investments continue. But I think it's kind of reflective in this space. You don't want to get left behind. We talked about this yesterday on Fast Market, where you start looking at, the enterprise side of the tech business. Microsoft dominates that, right? Search side of the business, Google dominates it. With AI, I think all this investment that you're seeing being put into the build-out, the infrastructure build-out, and these AI agentic and some of the chatbots and things of that nature, that's a concern for a lot of these tech companies because they want to be within that mix, and I think that's why you're starting to see all this investment in there. And then you start looking at the investments that AMD is making, ChatGPT, OpenAI, and it seems like a carousel or a circle at this point where the people that are making the chips are investing in the companies that need the chips, and then vice versa. So the investment continues. I don't think it's going to pull back anytime soon as people want to win this race.
What I'm picturing is like, it's going from the left hand to the right hand, back to the left hand, back to the right hand right now with that circle. But what's interesting is in terms of how the market treats it, right? Nvidia is still a little bit higher in the pre-market, even with the idea that they're going to spend. So they're being rewarded for making these types of, spending decisions and investing into whether it's debt or equity into AI. When you think about, kind of the drivers of the market, yes, we had a step back yesterday. But listen, we've been seeing record after record in equities. But we're still in this space where there's not major data, right, to drive macro direction because of the government shutdown. Does a name like Nvidia or these individual stores become more of the, technical trades to pay attention to in the near term?
I think on a technical basis, the euphoria and optimism going into equities has been pretty rampant. But you've seen that broadening out of the rally recently. The Russell 2000 recently at all-time highs before pulling back over 1% yesterday. You saw industrials within the S&P 500 hit record highs. Financials are at or near record highs. You've seen a push into utilities. Those are at record highs. So the broadening out of this rally has actually helped keep that momentum going. I think one of the key things that you have to look at is a lot of people are saying, well, our equity's overbought. Well, forward-looking valuation's really expensive right now. But then you start looking at the technical side of it, only about 54% of the S&P 500 companies are above their 50-day simple moving average. So that's not kind of reflective of overzealousness in the equity market at this point. There might be more room to run at this point. And then, Diane, you have to take into consideration that we're going into the typically strong fourth quarter here. What does that mean? Is the consumer going to be on pace to continue to support the economy at this point? So there's a lot of levers that are helping to push the market higher. But then you have to start thinking about the wealth effect of the market going higher. You have all this excess capital across the globe, and they're looking for areas to put those in, and they want some growth.
Okay, that's a good point, and especially also about the consumer, because listen, we all have we have the prime and deal stays happening right now. We'll see if that's a tailwind for Amazon and beyond. Thank you, Tom. That's Tom White, senior options contributor, co-host of Fast Market.